Real pleasure to moderate this panel, which I think is very timely. Disruption happens along fault lines, doesn't it? In finance, I think the fault lines are pretty clear. There's the shift to e-commerce, there's digital payments, there's the emergence of digital and cryptocurrencies, customer data platforms and ecosystems, and also the convergence mostly of consumer tech to be able to serve previously hard to serve segments like SMEs. I think today's panel is a terrific representation of kind of what some of these epicenters of disruption are. So in consumer payments, we've got Zip represented by Chris Patrick. In open banking with Frollo, we've got Simon Doherty. Welcome, Simon. And in SMEs and the disruption happening there with Joseph Healy, who's the co-founder and co-CEO of Judo. So like an earthquake, COVID didn't cause these tectonic forces, but it really released them. And we've seen that. And for example, I was intrigued to see that VC funding in fintech is 2.6 times bigger in 2021 than it was in 2020, so just in 1 year. So I know there's lots of ups and downs in there, as we've seen, but there's stuff happening. Now, at a geological level, Australia is incredibly stable and a bit boring. We don't get big earthquakes here. But when it comes to fintech, we are a hotspot. We already have fintech stocks worth about $60 billion on the stock exchange, and there's $5 billion of VC funding, which is actually $1 in $5 in VC funding in Australia is in the fintech sector. So today, with that in mind, we're going to explore two broad themes in turn. The first one's, hey, what's happening on the front lines of disruption here? We've got people who live there. What does it mean for our industry? And then the second theme we want to explore is what can and should Australia do to not only maintain its hotspot status, but maybe even get a little bit hotter. So with that, I'm going to hand over to the first question to our panel. I'm going to ask Chris Patrick from Zip, what's driven the dramatic growth in your business in the last 2 years? And looking forward, kind of what's next for you, given just how crowded the space is becoming?
Yeah, thanks, Chris, and great to be here. We've seen a huge amount of growth in Zip over the last 24 months, adding over 1 million customers in Australia and doubling our merchant base from 20,000 to 40,000 merchants. We're a customer-first organisation, and we speak to our customers to find out the features that they want us to build for them. And in 2020, our customers were telling us that they loved using the product, but they wanted to solve for more broad acceptance. And with the COVID-related lockdowns kicking in, and many people moving to online shopping, we created a single-use Visa card that customers could use to shop securely online. And that had a really strong take-up, particularly from people that perhaps hadn't traditionally shopped online. Following the success of that product, we launched Tap and Zip. That was a persisting Visa card that can be accessed through the Apple or Google Pay wallet. And we wanted to move quickly and get that product into market so that as the lockdown was lending and people returned to in-store shopping, they were able to take advantage of that product. And in fact, it was 3 months from our first conversations with Visa to getting our first cards issued, which was a record for Visa globally. While the growth was strong in Australia, globally, we added an additional 7 million customers. We looked at opportunities offshore, and we took an approach to find businesses to partner with that shared common products, common values, and common technology. There's a huge opportunity in the US and also in emerging markets. Buy now, pay later today accounts for just 2% of e-commerce spend, but it's believed to be the fastest growing payment method over the next 5 years. And we think that with our expansion globally, we're well placed to capture a larger share of that. On the question of what's next for Zip, it's really important that we continue to innovate. And I think when we were a smaller startup, innovation tended to happen organically. We had lots of brilliant people and we gave them space to be creative. But as the business has grown, we need to be more deliberate in creating that space for innovation. We run hackathons on a regular basis where we get people to come together from around the business to work on customer solutions that they're passionate about. And we've got engineers that will work through the night to create MVPs, and at the end of the process, the best features that are developed move into our product and go live for our customers. And many of our most widely used features have been born out of that process. We're also exploring the use of innovation labs to look at broader trends that might impact our business longer term. We're currently exploring areas such as Web3, blockchain, and decentralized finance to think about how that might impact Zip in the future. And I guess, understanding the importance of innovation, I'd encourage everyone here to think about how we're creating space for innovation in our businesses.
Thanks, Chris. I mean, it's no surprise, is it, that if you're on the edge of financial innovation, innovation has to be a hallmark of your company, doesn't it? Simon, let me turn the question to you. Frollo's all about open banking.
Yep.
So what's next for open banking, and can you touch on what some of the broader implications of this could be for our financial services industry?
Yeah, well, Chris, the open banking for the last 2 years has really been laying down the pipes, making sure that the data is right, that is going to really power this kind of revolution in banking that we believe is coming. And that has got us to this point, and I think what we're seeing now is the rubber hit the road a little bit. We're starting to see some use cases get out into the market and really see how banks can deliver value to consumers by using this new form of data. So some of those use cases, I mean, there's two really dominating the market at the moment. The first is lending. The reason that lending is such a dominant use case is that it has a very good value ROI on both sides of the coin. Banks get value from speeding up the lending process and the time to yes. And they also get value from conversion rate because the data that they're getting to base those decisions on is so much better. So we're now live with a Big Four bank doing that data ingestion piece for them and getting that into their lending process. And we'll soon start to see the results of that and how that's going to innovate lending, I think, in banking and through the whole lending market. The second use case is really personal finance management. So we're live with a couple of mutual banks now, P&N Bank and beyond, where we are creating open banking powered apps. So that's using the quality of the data that we now have access to from banks to create a new experience for the consumer. And that really is that giving the consumer that 360-degree view of their finances. So we know that the consumers have more than one banking relationship. And we're now able to pull that in a secure and regulated way, pull that data in and give the consumer visibility of it. And where the value is for banks in that is that it's great customer engagement. But it also, in some ways, speaks to the previous segment, which is you can deliver hyper-personalisation around really understanding what the consumer's total financial world looks like. So that hyper-personalisation can give you insights that let you walk a little bit closer with the consumer in their financial life and make sure that they have the right product in their hands at the right time. So really, I think we'll start to see banks have to innovate very differently, have to compete very differently, and really new ways and different ways that they can deliver value to the consumer.
Yeah, so I mean, if you create a whole industry that's been built around navigating frictions and make it frictionless, there's going to be some interesting things happening, isn't there?
Yeah.
So, Joseph, let me turn the next opening question to you. I think you openly say that you're Australia's only challenger bank. So tell us, what's that like? What's disruption on the front line of banking look like when you're going head on here?
Well, I'm sure there are other banks that consider themselves to be challengers, and they are. I mean, I should probably say Australia's newest challenger bank, because we were a bank that was a PowerPoint 5 years ago. But it was a PowerPoint with a very strong vision as to the business that we wanted to build, which was we're year 5 in a 10-year vision. And we had a very strong theory, if I can use that jargon, about the problem that Judo was seeking to solve in the market, and how we would solve that problem. We believed that there had been a market failure, again to use economic jargon, in the provision of banking to the SME economy. This was not unique to Australia. This problem exists in most of the Anglo-American economies around the world. But the banking system had switched quite aggressively towards the household sector in terms of its investments, and had industrialized in a way that the SME economy was very much left, in our view, with a take it or leave it proposition. And as a result of that, this market of failure emerged. So we felt that building a bank that was unashamedly a pure play, a specialist bank, that was a mix of what I would call traditional values in terms of being a very relationship, human-centric, but built on a modern technology-enabled business model. But the technology was there to enable the service, not to define the service. And that was an interesting distinction, because yesterday evening I was on a call with a bank in London, in the UK, called Starling Bank, which has been a very successful startup. But they came to the market with a view that technology was going to solve the market problem that they saw. Whereas we came to market saying that there's a business model that was going to solve the market problem, and then the technology we built around that. And I say it's a different perspective, because what I've seen when I look around the world at fintechs and other startups is that there's been a huge emphasis on technology, and then the question is, where's the business model? How do we make money out of this, right? Whereas we said, let's build the business model, and then let's build the technology that allows us to go from where we are today to a scalable bank, knowing that the business model works. So we took the view that the SME, again, as I say, a specialist bank, unashamedly, I don't see Judo ever changing from being other than an SME-centric bank, relationship defined. We went public last year, and we put some metrics in the public domain, which said we'd build the bank to within the medium term to a $20 billion lending book, a 3% above 3% net interest margin, a cost-to-income ratio, which is really important here, in the low 30s, a cost of risk well within 50 basis points, which is very conservative, and a mid-teens ROE, given that we're a standardized bank. Now, we believe strongly in the power of specialization. I mean, when I keep on speaking to my staff, that if you look at the Olympic Games and go back over 30 years, and you look at the gold medal winner in the decathlon in both men and women's, and then look at what the specialist does in each of the 10 disciplines, you'll see that the specialist consistently outperforms the generalist by 20 to 30%. So specialization has real value. It has real value to the service you provide the customer, because they're dealing with an institution that only thinks about, only talks about, only dreams about SMEs. And having bankers who are deeply skilled in the craft of SME banking was important to us. That's why I talk about the traditional values and the kind of technology-enabled values. But we did believe that the craft of SME banking, and I use that term purposely, that the craft of SME banking and the way that banks were dealing with the butcher and the baker and the candlestick maker had been lost. The industry, as I said, had heavily industrialized. I was a big part of that myself, because I ran a large business bank for 8 years, and I was very much part of that. You drive costs, you outsource stuff to foreign countries, or because the costs are lower. But actually, what you're really doing is de-skilling a core competency inside the organization, and that is the way that your bankers, in the case of SMEs, this would be a different proposition in the consumer market, but in the case of the SMEs, the way that your bankers can relate to the butcher, the baker, and the candlestick maker are unique small businesses that don't spend a lot of time thinking about finance, but need someone to help interpret and understand, think about the risks, think about the medium, long-term funding needs. And that's the theory, if you will, of how we have thought about the company. There's a lot more competition in the SME banking over the last couple of years, which is good to see. We warmly embrace competition, because and it goes back to my Olympic analogy that, competition causes everybody to lift the game. And when we think about the future of our company, and people say, well, all the big banks are much bigger than you, but much more muscle, how are you guys going to achieve the medium-term metrics that you've set out to achieve? And we'll very confidently say that different institutions play their own game, and they play it to their strengths, to their credit. But we will focus on our game, and that is an organization that deeply, deeply, deeply understands SME banking. A new bank, but a bank staffed by very experienced SME bankers, and that's part of the way that we hire people into the company. We feel that the SME economy is critically important to the economy generally, and I think that nobody would disagree with that. But it is about time that the SME economy got the service that it needs and deserves from the banking system. And so the more commitment and innovation we see in the banking system towards the SME economy is not a concern or a risk to me. It's something that I really quite enjoy and embrace. It's a rather long-winded answer. I hope I touched it.
No, but well, it was fascinating. I'm tempted to ask lots of follow-ups, so we'll move on. But I think we can see the common ideas here of these fault lines. You can see there's a specific use case that's being taken in payments. We can see there's a emerging kind of set of regulatory and technological enablers around open banking. And like in many industries, whether it's steel or airlines, an underserved customer segment that gets focused on. So let's not, it might all be fancy terminology, but it's good old-fashioned business at the end of the day. I just want to move on to the theme, though, of in the second half of our discussion of making Australia's hotspot even more earthquakier and hotter than it already is. So, Chris, let me start with you with a bit of a challenge, actually, which is, come on, Zip's an Aussie player. It's all really impressive what you've done, but you're in a global space now. How is little Australia going to stay relevant and ahead of the pack in this game? I'd love to know your thoughts on that.
Yeah, it's a great question. I think Australian businesses over the last 5 years have done a great job at exporting local innovations globally. We saw a couple of years ago a market that was starting to mature in Australia, but one that was very much in its infancy in the US. And we wanted to take that opportunity. But to continue to export innovation, we need to keep innovating. And I think that in order to do that, we need to find the best and brightest people and encourage them to work in our organisations. The world's become a much smaller place in the last couple of years. We're no longer restricted to hiring people that live within 100 kilometres of our office. And in fact, Zip now has people in all corners of the world that are working for us. We've been able to tap into markets like Silicon Valley, where we don't have a physical presence, but can have people working for us remotely there. We also need to encourage diversity of thought. And to do that, we need to create inclusive workplaces. We've rolled out policies. One we rolled out recently was to support return-to-work parents who are able to come back for a period of time on a part-time basis while drawing a full-time salary to really support their transition back into the workplace. We've partnered with Women Who Code to lift the female representation in our engineering teams. And we understand that there's still a long way to go in that area. We're also exploring areas such as neurodiversity. We know that neurodiverse people think about problems in ways that neurotypical people do not, and also understand that traditional ways of interviewing candidates don't necessarily find those types of people. So we're making changes to the way that we interview to try and encourage different types of thinking in our business. I think we also need to continue to grow the talent pool in Australia. So reopening the borders to skilled immigration, and encouraging the next generation to study STEM subjects and foster homegrown talent will be important. And finally, I'd say that we need a regulatory framework which encourages innovation. There was an article in the Fitness Week with a quote from Anna Bligh that talked about not taking innovative products and trying to force them into a regulatory regime that never considered them. She talked about regulators having broad powers that allowed them to be light touch and encourage innovation, but also having sufficient powers to step in where required. And at Zip, we very much believe that there needs to be guardrails to protect consumers, but the regulation needs to encourage innovation.
Yeah, it's true, because banking was traditionally a very multi-local game, and the innovations you're playing with, as you found with Zip's model, are highly exportable and with the global talent pool. So it's a fascinating challenge. Let me move, Joseph, the question to you. As I mentioned before, there's $5 billion of VC funding in fintech in Australia. So that suggests, and if you look at just in all the different segments in the Tech Council put out a report this week, and if you look at all the various bits and pieces, fintech has the most money of any one kind of focal area. In your view, what's it going to take to unleash the potential of that kind of startup and that VC community?
Well, it's a great question. And it touches on the comments that have been attributed to Aaron, that innovation moves a lot faster than policy, regulation, and law. And that's a real problem. It's a problem because it can constrain and frustrate innovation and make the economics of innovation harder to crystallize. but it also creates an arbitrage within the financial system where two businesses, one that's regulated and one that's not regulated, basically doing exactly the same thing, and you start creating an imbalance in the financial economy, which I don't think is good. So my recommendations for how fintechs get the investment and the growth potential is that we have a regulatory environment that it's a lot cleaner, that's consistent, that the laws and regulations stay at pace with innovation. Easier said than done, I have to say. But the potential of innovation is going to be, particularly new startups, is going to be constrained by the regulatory and legal context, the public policy context in which they operate. I also feel that there should be real tax incentives to innovation. There are some, but there should be more, because I entirely agree with my fellow panelists that there's huge potential in financial services innovation that we've really got to get behind. I don't buy into this idea that we are a small country distant from big markets. That's a 20-year-old paradigm. We're in a very globally connected world. Australians overseas, in fact, whenever I'm in London or New York and you call in and speak to Australians who are working in the financial innovation sectors there, it's amazing. And you want to bring some of that talent back. So there's no reason why we shouldn't see ourselves punching well above our weight in driving financial innovation. We have nothing, in my view, outside human talent and capital. Is $5 billion enough? No, I don't think it even starts to get close to it. So I mean, the capital market here, and I can speak also from experience, when we were raising our first money, we spent more time in New York, London, Singapore, and Hong Kong, and the Middle East, because the capital markets weren't really open for what they considered to be untested and risky business models, and that's a big concern. We want much more capital stacked up against innovation, a tax and legal system and compliance system that supports it. So this is not something that is answered simply by new entrants coming into the market. There has to be a public policy framework in which this all works, and a real movement behind supporting financial innovation, because we can achieve great things, in my view.
Thanks, Joseph. I think that's really encouraging. Simon, I'm going to ask the next question to you, but it really is a wrap-up question to all our participants, because I want us to kind of stop and imagine a little while that it's not 2022, but it's 2027. And it's not you at this panel, but the next batch of financial innovators. And so what I want to ask you is, what kind of companies would be on the panel in 5 years' time? In other words, what's next for fintech in Australia? So starting with you, Simon, but then opening it up to my fellow colleagues.
Yeah, thanks, Chris. I think it's interesting that the previous two responses are looking at how regulation can keep pace with innovation. Our little corner of the world around open banking is an area where it started with regulation and they're asking us to innovate on top of it. So it's a slightly different paradigm, but kind of no less interesting. I think when you take the power of what open banking data can deliver, and I look at what's happening in markets like the UK, which are much more developed than ours in some respects, certainly in open banking it is. When you take that and combine it with something like banking as a service, what you're really starting to see is some incredible innovation capability. So I look at people like Revolut and Monzo over in the UK, and they're building these super app capabilities where they bring in all components of your financial life. So not just your transactional banking, but bringing in your super, bringing in your investments, your crypto, all of those things into one place. And then the open banking rails are enabling transactions to happen within all of those parts of that app as well. So, that for me is really exciting. And I think it opens up financial services beyond perhaps traditional banking and the people sitting in this room to some degree, hopefully not in a scary way, but I think it opens it up to companies like energy, telco, and allied financial services and innovators who are prepared to be brave, to build on top of open banking and really innovate. And I think those are the kind of companies that will potentially be in this room.
So we might see some mega platforms, some Amazons of banking that
Oh, it's definitely the capability is there now. The tools are there. They're happening today. So when you look at Westpac with their banking as a service platform with Society One, for instance, Volt working with AFG, those things are happening today. The tools are there today. So it just takes brave companies to step into that.
And Joseph, what do you reckon? Who are the people who are going to be on this panel in 5
Oh,
years?
I think potentially totally different. I mean, I'm building on what's already here today. But I think one of the things about fintechs and neobanks and challenger banks is the language and the labels are just can be quite confusing, and make it difficult to kind of look at this industry clearly. But there is no doubt that innovation, we're going to see a lot more innovation, and I would love to see more innovation around the SME economy. I think there's a lot of innovation in the consumer economy, which is fantastic, but there's a lot more that can be done. And I think the next generation in 5 years' time could be talking a very different narrative to the one that we're talking about, not replacing what's here, but building on top of that. And I think that's quite exciting, actually.
So you heard it first. I think that the panel in 5 years' time has got more chairs on it. And Chris, just finally to you to one final comment from you about what's next for the industry.
Yeah, I think we're seeing disruption everywhere at the moment. There's companies like Athena that are getting into the mortgage space. You've got Superhero that's making investing available to millions of Australians. And to Chris's point, I think financial super apps will become more important. The more that we find ourselves accessing financial services from various places, we need to find a way to bring that back together. So I definitely think we'll see some plays in that space.
Well, thank you, panellists. I thought that was a really rich discussion. I've certainly walked away with the re-upped my optimism that Australia's the 20-year-old model of Australia being a distant place that maybe a few of us will one day kind of actually know we're actually deeply integrated in a world of global opportunities, and I think that is a message of abundance and clarity that we should embrace here today. So thank you to my fellow panellists, to Chris Patrick, Joseph Healy and Simon Doherty.
Thank you.
Thanks.